we'll change the amount for 30,000 Australian dollars, and the rate you want to buy that at is 0.7350. You believe that the market could come down. It could be because you've looked at some technical analysis. It could be that you believe that it's overvalued at the current levels, being around the 72 sort of area. Therefore, you prefer to buy it at 73.50. That would be buying on a limit, and you could make that order just for today, which means it will work all night through to the change of clocks, which is basically when New York closes at the end of the day. So that could be a day order. You may want a good till cancelled, or you may want a week or a month or whatever it is. Most people will work on very short-term basis in the currencies. I'm not going to get into currency options, but you can obviously do that as well. That's more for the longer-term traders that are looking to follow a trend in the market. You can use those as well, and we'll be covering those in later webinars towards the middle of the month. Day traders mainly will leave it obviously as a day order. Then you can place this order if you wish. The if done scenario is now where you may wish to put in some exit strategies. With this, it may be you're going out into the golf course, or it could be you're going out for lunch. Being that currencies can move very quickly, you would probably want to, unless you're sitting at your screen, at least put an exit strategy from the risk management point of view. It may be a fixed stop, it may be a trailing stop. For this exercise, we'll just use a fixed stop, and let's say you wanted to risk 20 points on this, which would mean that at 73.30 you wanted to exit this position. This order at the top here has to be done before this order will even be considered or placed into the market. So we must get this entry order at the top here done. Then once that is done, or if that is done, then this order will protect you on the downside, and you simply place those orders. One thing I will say, and even to those clients that are in this webinar at the moment, get into the habit as part of your overall strategy of reading what you've done. There's not much point ringing us or whatever when you've placed an order, and you will make keystroke errors. Just it's human nature. Get into the habit of reading what you're doing. It is a lot easier to change it now and fix it rather than trying to change it once it's done, because once it's done, that's it. There's nothing we can do for you to help you. So we've placed that order, and just bear with me a moment. Bit of technology doing its best. We've placed that order, and now, as with the other platform, you can go to your open orders and monitor that order in the marketplace. Now, a lot of people seem to have problems with this. It's a pretty simple exercise. You've got an order here at the top where you're looking to buy 30,000 Australian dollars at 73.50 as a limit. It's a day order, and your order entry has a related order to it. So your entry order has a related order, which is the order below it, which is to exit this position if it's done at 73.30 on stop. If you don't like that order, or you want to change that order, you simply click and it will highlight the order like that, and down the bottom of this page you will now see buttons which allow you to change it to market. It may be that you want to go straight to the market now because there's been something released, or you can simply cancel the order. Okay, you simply click it and it will cancel the order. You'll notice up the top here that has now disappeared. Again, as good business practice, and this is a business, I encourage you to monitor your open orders. Again, we cannot do anything. If you're putting an order in the marketplace in the real world, on simulation, you should practice this. Monitor on a daily, whatever, as many times as you can what you're working in the market. Be fully aware of your potential risk, because currencies will move very, very quickly. Now, some other areas that we need to cover in here is some of the research and the news things which we provide to you. The economic calendar, currencies will react technically, but they also have very, very severe gyrations when there's news released, particularly economic news that will impact on either interest rates or inflation. The currencies can be driven fairly heavily by monetary policy as released time to time by government. Now, the difference with that to, say, an equity market in the currency markets is that you're dealing not with just one country, but you're now dealing with two countries. In the case of the Australian dollar against the US dollar as a currency pair, you have to consider what's happening in Australia and also what's happening in the US in everything that you look at in regards to that from a fundamental perspective. If there's high inflation in the US and interest rates are going higher, which they're not at the moment, but if they were, higher interest rates tend to lead to higher currency values simply because if you deposit that currency you get a greater return. Similarly, on the other side is if it's the Australian dollar and we've got a lower interest rate environment than the US, it will tend to weaken the Australian dollar. So the view there may be, just using that as one fundamental indicator, that you would sell Australian dollars and buy US dollars simply because the Australian dollar may depreciate in value given that interest rate environment. The other things you do need to consider are things like not only economic policy and figures like CPI and unemployment and all the other economic indicators that exist, but other things like, is it a stable government?